Randy, thank you so much for joining us today. Earlier this year, working on the Bristol-Myers deal, it was one of the biggest deals, financings you and Morgan Stanley had done together. Can we see a lot more of that?
Yeah, we've been very fortunate through our relationship with Morgan Stanley. We've been exposed to a couple different opportunities to jointly provide financing on large-scale M&A. The most recent two transactions actually happened to happen in the healthcare space. I absolutely think, although there's certainly a lot of uncertainty in the market today, that high-grade M&A will continue.
Well, I'm glad that you brought that up because a lot of the investors we speak to say they're a little worried about large corporations levering up even more for M&A, given that they're already so levered. What types of financings do you see investors more receptive to?
Yeah, I think within the high-grade space, there's a pretty strong demand across different pools of capital, whether it be in the bond market or, of course, in the bank market. I think it changes the dynamics a little bit as you get into the more the leveraged finance space, where some cracks are starting to show perhaps on the more levered part of that market.
Is that something to be concerned about, leverage finance right now?
I'm not sure if to be concerned about. I think it's something we have to keep an eye on. You're starting to see it already where the market is starting to distinguish, not just in the leverage space, but in fact right across the corporate space between sectors that are in favor and sectors that perhaps are less in favor. It's probably most pronounced in the single B space today.
Well, speaking of leverage finance, at the same time you see a lot of large loss-making companies like Uber come back to market for debt and able to raise the funds. Do you think we'll see more of that? Or at what point do investors say, you need to start turning a profit before I start lending to you?
I think a lot depends upon which investor category you're going to. So if you're thinking of the traditional leverage finance investor, they're going to be a discipline around wanting to see companies that have a path towards profitability. But there'll always be pools of capital that might be more speculative, that as long as they can determine there's a risk reward that makes sense, there's still going to be capital available.
So from a large Japanese bank, you're subject to negative interest rates, right? Here at the IMF and the IIF conferences, that phenomenon is front and center. I'm wondering how your clients are grappling with it and how much this is being passed off to the corporate client base.
Mm-hmm. Yeah, it's a challenge for us, and it's a challenge for us because we have a very large retail network. We have over 30 million retail customers in Japan, and culturally they're a large saving community. So what we've been challenged to do is to try to convert what has historically been a saving society into a little bit more of an investing society, to pivot towards, perhaps from our own standpoint, a broader wealth management platform in order to accommodate that. On the large corporate side, what we've seen, I think, is as much driven by the lack of growth opportunities at home is our Japanese clients looking overseas for acquisitions. So Japanese outbound M&A has been very healthy, and we would expect it to continue to be healthy.
Can you drill in a little more there about what types of companies are pursuing acquisitions and what's driving it?
One of the largest components of the overseas acquisition have been in the insurance space. Again, demographics would certainly dictate that when you think about the demographics of Japan, an aging, graying, kind of like myself, aging, graying society. So moving overseas, and particularly the U.S. has been a very accommodating market for them. It's an environment where great comfort in the legal system and regulatory environments. We've seen a lot in the insurance space going overseas, particularly to the U.S.
It's been a little while, though, since we've seen a large-scale insurance deal. Are they looking for mostly U.S. insurance companies, or are they looking for asset management deals abroad?
A little bit of both. We have been acquisitive on the asset management side. We acquired an asset manager in Australia quite recently. So I do think both will drive it. Two different categories, I would think, between what insurance companies, Japanese insurance companies, and even when you think also of Japanese healthcare and pharmaceutical sector, will continue to look overseas.
So from where you're sitting today, beyond negative rates, is there a big global concern that your clients have right now that's making them hit the pause button on deal making right now?
No, when you think of our global clients, because we run a very large global organization focused on both multinationals as well as local companies in places where we have local operations, I think people have one eye, if not two eyes, on the economy. They have at least one eye, and again, two eyes on the geopolitical environment we're operating in. So I think people are cautious. I think the boardroom dialogue is cautious, but I still think even in respect of that cautiousness, people recognize that the growth opportunities are probably going to come through investment overseas and expanding of their own business.
So is some of this kind of more isolationist sentiment really coming out of the United States, not worrying some of your clients at this point in time?
No, I think our clients who have looked at making acquisitions, our global clients have looked at making acquisitions in the U.S., maybe China as an exception, have found it still to be a pretty welcoming place when it comes to finding opportunities. And similarly, when we look at our we run a very large U.S. business. When we look at our U.S. clients going overseas, they continue to find opportunities to fill in pockets of need that they have around business expansion.
Randy, thank you so much for your time.
My pleasure. Thank you very much.